Hello, my beauties. It's Shawana Latrice, and I would like to say thank you for watching. If you like what you're about to hear, please like, subscribe, and hit that notification bell so you would know when I post all of my videos. And if you know someone who could benefit from my channel, please share it as well. I don't know how many of you guys know, but I've been in business about 17 years. And today I want to talk about a form that I've seen more this year than I've seen since I've been in business. It is called the 1099-C, which is the cancellation of debt. According to the IRS, nearly any debt you owe that is canceled, forgiven, or discharged becomes taxable income. You will receive this form from the lender that actually forgave the debt. What that means is if you have a credit card and let's say the balance is $10,000. Well, you came across some hard times, life happened, and you wasn't able to pay off the balance on that $10,000 credit card, and the lender decides to charge it off. Because of the charge off, that is one of the reasons you could receive a 1099-C. Another example using the same information, let's say you decided, okay, I'm gonna settle. I'm trying to rebuild my credit. I want to pay some things off, but I really just can't afford the $10,000. Guys come to an agreement. You settle on $5,000. You pay it off. It's taken off your credit, whatever the case may be, but that is still $5,000 left that is owed that they had to write off. That $5,000 could lead to you getting a 1099-C. Now, one of the questions that may arise is, well, how does that affect my taxes? The 1099-C is taxable income, so you have to report it on your taxes. You cannot leave it off because just like you receive the 1099, the IRS also receives the 1099, so they know it was actually sent to you. Even if you don't get caught that year, eventually it's going to come back and haunt you, and that is not something you want. With the 1099-C, another way that it affects your taxes is because it's taxable income, it can reduce your tax refund. And on the flip side, it can increase if you owe. It increases that amount. Like I said before, you do not want to leave this form off because you're trying to not reduce. You want to get more money back. You want to make sure this doesn't affect you negatively. You can't really get away with leaving it off. One of the examples, this was like the worst case. I felt so bad because this popped up years later for one of my clients. He received a 1099-C for, I think, $106,000. Now imagine you filed your taxes and you receive a 1099-C or another form for $106,000. Now here's the thing with this example. He never received the 1099-C. Only way he knew about it is because he received a bill from the IRS for like $60,000, something like that he owed. And he called me immediately and was, Shawana, I owe all this money, and he was trying to figure out why. Well, one of the things I do is I'm not going to talk about the letter. I want to see it, every page, front and back, because a lot of times the letter is misconstrued. It's not as serious as the taxpayers think. And in some cases, it's more important and more serious than the taxpayer thinks. So it can go both ways. So I really just would like to see the letters myself. So when he sent it to me, the first thing I noticed was there were missed income, and we couldn't figure out what it was. So when I spoke to him, I explained to him what the letter said, and we went from there. But the thing was, you do not want to owe that much money years later. This person was in the middle of buying a house. They lost everything because they did not report the income. And in this case, it wasn't even his fault. He didn't know that he was even going to get a 1099-C. He didn't even know anything about it. He never received it. I am extremely glad that now you can register with the IRS. That way you can see what's going on. You can look at your transcripts. Don't wait to receive a letter from the IRS. Get in the habit of looking at your transcripts every year. Make sure that you literally gave your tax preparer all of the documents that is reported on the transcript, because if you miss something, they may not catch it this year. They may not catch it next year, but you don't want to wait and then they send you a letter and you owe a ton of money because income wasn't reported when you filed your taxes. And that's whether you knew about it or not, you're still responsible. This video is really to inform you guys. Get in the habit of checking your transcripts. If you have not registered with the IRS or registered to get an account with the IRS, please do so. You want to pretty much look at your IRS account like you would look at your credit account. A lot of people check their credit a lot. A lot of people check their bank accounts every day. I'm not saying you have to check the IRS site every day. It's like, just make sure you get an idea of what is being reported. Make sure everything was reported and that everything is accurate on your tax return based on what this income transcript say. Now, keep in mind, income transcript versus your income tax transcript. They're two totally different things. One transcript is giving you all of the income that was reported. Your tax transcript is showing what you actually filed. So check both of them, make sure they're reconciled, make sure they match, make sure everything is on there. And like always, if you have any questions, any concerns, please feel free to leave a comment. If you know anyone who can find this information useful, please feel free to share it. Thanks again for watching, and please like and subscribe, share, comment, and please don't forget that notification button. And until next time, bye-bye.